What is the current state of the Russian economy? Is it true that it is proving immune to sanctions? What are the Kremlin's main economic concerns? Over time, these have become the questions many of us ask when thinking about Russia. When Vladimir Putin launched his assault on Ukraine, the international community responded by implementing a massive package of sanctions. These sanctions have since been progressively developed and increased. Most of Russia's trade and economic ties with the West are being severed, leading many analysts to predict that the Russian economy would suffer a complete collapse, a financial disaster. However, that collapse does not seem to have occurred. By February 28, 2022, Russia was facing a financial crisis, with sanctions hitting its economy hard. Yet, according to official sources, Russia's GDP contracted by only 2.5% in 2022, and the public deficit reached 2.3%. Yes, these are bad numbers, but certainly not catastrophic. Apparently, the Russian economy ended the first year of the invasion much better than anyone had anticipated. So the question is Russia truly immune to international sanctions? Is Vladimir Putin winning the economic war? Dear friends, like an unfolding opera, in this video we will examine exactly the 5 major issues facing Vladimir Putin's Russia, the 5 major economic cracks that could derail all of the Kremlin's plans. Hello to all the community of Finance for All, welcome to another video. For many months, the sanctions were a major disappointment. Not only did the Russian economy not falter, but things seemed to be going better than ever. Russia continued to make money. The war and sanctions caused oil and natural gas prices to skyrocket, which meant that even though Russia was selling fewer hydrocarbons to the rest of the world, its revenues were actually much higher. In fact, throughout 2022, Russian revenues grew by nearly 30%. Consider this, Russia's income from oil and gas sales increased by almost a third during the year. And we're not talking about just any sector, hydrocarbon exports are the crown jewel of the Russian economy. We're talking about an activity that in 2021 generated nearly half of all exports and more than 40% of government revenue. In other words, in some ways, the sanctions had exactly the opposite effect of what was intended. Instead of cutting off the Kremlin's income, they caused money to flow in abundance. However, hold on, because now this situation seems to be changing, and changing completely. Both the European Union and the United States, along with the United Kingdom and other allied countries, have gradually been tightening their restrictions on Russian gas and oil. The culmination of these efforts occurred on December 5, 2022. When the price cap on Russian crude oil came into effect, and later, the same was done for gasoline, it meant that no company from the European Union, the United States, or other countries that joined the agreement could provide services related to the sale of Russian crude if it was sold at a price above the set cap, currently $60 per barrel. These services include transportation, insurance, or financing of the crude purchase. But that's not all. In addition to setting this price cap, Western countries are also ending their own purchases. For instance, if in 2021 Russia sold over 4 million barrels of crude or refined products daily to EU countries, that number could drop to below 500,000. This has forced Russia to look to other markets, particularly in Asia. The problem is that transportation is much more expensive, and there's also the risk of sanctions. Because of this, buyers from China and India are demanding significant discounts from Russia, which explains why Urals crude is selling for around $50 per barrel, well below the price of Brent. And, of course, something very similar is happening with gas. So, less oil and gas sold, and at lower prices, means significantly less money for the government. The question is, how much less? To give you an idea, according to the Center for Research on Energy and Clean Air in Finland, we're talking about around $280 million per day, over $100 billion annually in lost revenue, and that's not even counting gas. If in 2023 the average price of Urals oil was around $60 per barrel and spending remains as planned, Russia could face a deficit of around 4.5% of GDP, a very, very hard blow. But you know what? This is just the beginning. The sanctions have not been limited to the energy sector by any means. In fact, their main purpose has been to disconnect Russia from international trade. For example, among many other measures, exports and imports have been restricted, Western ports have been closed to Russian merchant ships, airspace has been closed to Russian aircraft, and dozens of financial entities have been expelled from the SWIFT system, complicating transactions with foreign banks. The result is a chart like the one you see on the screen. Here, you can see what has happened to industrial trade with Europe, which, until the invasion of Ukraine, was by far Russia's best customer and main supplier. As you can see, trade with Europe has plummeted by more than 60%. But this is not an isolated case, similar situations are happening with most of the rest of the world. Russian companies now have serious problems selling their products and also in purchasing the supplies they need to produce. A good example of this is the military industry, where many countries are canceling orders from Russia out of fear of sanctions. Furthermore, Russian equipment no longer has access to Western technology, such as advanced chips, which significantly limits its capabilities. For example, Indonesia recently opted to purchase American and French fighter jets for $22 billion, with the Russian Su-35 losing out. Indonesia's shift from an agreement with Russia to new deals with the United States and France highlights the power of US sanctions. India also has a helicopter deal with Russia for the Ka-31, but these changes will greatly impact one of Russia's most important industries, the military sector. But it's not just about the military. The Russian business sector is highly dependent on supplies that are now either suspended or severely restricted. If you analyze industries like pharmaceuticals, chemical production, machinery construction, metals, and mining, it's hard to find a sector in Russia that doesn't rely on imports for at least 50% of its inputs. This explains why Russian trade with the rest of the world is plummeting so quickly. Even with hydrocarbons and natural resources, both the IMF and the World Bank estimate that Russian exports will drop by more than 20% in 2023 compared to 2021. And what does all this mean? In the medium term, it will result in far fewer jobs, the bankruptcy of numerous companies, and significantly fewer resources for the government. But we're not done yet, let's continue. Russia is not a young country, quite the opposite. It's a relatively aging country that, except for a few years and the annexation of Crimea in 2014, has been losing population since the fall of the Soviet Union. Between 2018 and 2021 alone, it's estimated that Russia's population shrank by nearly 1.5 million people. In other words, this isn't a country with an abundance of young people. Despite this, the 2022 Ukraine war dealt a new blow. In the fall, the government mobilized around 300,000 young people, taking them out of the labor market. On top of that, the war, the exodus of companies, and the threat of being drafted led many others to pack their bags and leave Russia. Estimates suggest that between 800,000 and 1.2 million people have left. To make matters worse, there is now talk of a second mobilization. But that's not even the worst part. The real issue is that many of those who left were highly qualified young professionals, the ones with the most job opportunities abroad. For example, the Russian government itself estimated that at least 100,000 IT professionals left the country permanently after the invasion of Ukraine. This represents nearly 10% of the entire workforce in that sector, including programmers, developers, security experts, designers, systems engineers, and more. So, you can imagine the implications this will have in the medium term: less innovation, less knowledge, lower productivity, and an aging population. Interestingly, many of these professionals have headed to none other than the United States of America. Of course, the government won't emerge unscathed from all of this either. The war in Ukraine has significantly increased its spending, destroyed much of its military capabilities, which it will likely want to restore, and now it's beginning to experience a decline in revenue. While the public deficit for all of 2022 was 2.3%, by December of that same year, it had already surpassed 4%. And now, everything points to things getting worse in 2024 and the years to come. The problem is that a large part of the public debt is being purchased by Russian banks with financing from the Central Bank of Russia. In other words, money is being created to finance the government. This hasn't been an issue as long as the trade surplus with the rest of the world remained high. However, as this situation changes, this policy could have a very negative effect on the ruble and inflation. But wait, there's still the fifth and final major issue to discuss. Let's get into it. Perhaps, over time, this will be one of the biggest blows to Russia, the exit of companies and the collapse of foreign investment. Obviously, few companies and investors will be willing to put their money into the country while sanctions are in place. For example, in 2022, the financial account of the balance of payments, which includes both direct investments and portfolio investments, recorded an outflow of over $55 billion, despite existing capital controls. Clearly, Russia is losing a huge source of wealth and jobs. Foreign investment is usually crucial for growth, development, and convergence with wealthier countries, but now this opportunity has also vanished. So there you have it. These are the 5 major problems facing the Russian economy, 5 issues that could eventually derail the Kremlin's plans. As you've seen, Russia is reducing its ties with the rest of the world, and sooner or later, this will be reflected in its economic data. And you know, since the start of the war in Ukraine, the Moscow stock market has lost nearly 40%, and without government interventions, this drop would likely have been much steeper. But now it's your turn. Do you think Russia will be able to withstand international sanctions? How do you think the Russian economy will change in the coming years? What will happen to Putin's regime? What implications will all of this have for the rest of the world? Leave your thoughts in the comments, and let's discuss. And as always, if you found this video interesting, don't forget to like and subscribe.